can you bring something to the table outside of capital, right? Which is, what is your understanding of that space? Can you be net additive even in the diligence process for the entrepreneur? There's no logical math to pre-seed or seed valuations. That's the reality. There is no logical math. The math here is two things typically.
I'm curious to know what day to day looked like in those early days while you were raising Fund 1. In this week's episode, we'll be chatting with Sathya Sampat, founder and general partner of BoldCap, an early stage venture capital fund that invests in software businesses built in India but for the global market. Satya's portfolio includes companies like Mailmodo, SpendFlo, Togai, as well as my own startup, SpotDraft. Our goal for this podcast is to go behind the scenes of how VCs operate, and hopefully, this can be a primer for anyone who wants to start their own VC firm one day. With that said, thanks for joining us, Satya. To start with, do you want to give us a quick intro about yourself?
First of all, Rohit, thanks for having me. Good to get connected on this podcast outside of our general work conversations. Good morning to all from New York, my favorite city in the world. But let me give a little bit of background about myself. Spent my time as an engineer, first back in India. Did my bachelor's there. Then moved to New York, 2012. Spent about close to 8 years in and out. First went to NYU to do my master's, and of course, I'm sure we'll talk about this a little bit more in the podcast. But initially started as an accelerator, then built a company, and later had the opportunity to move back to India and launch a venture fund. And fortunate that we're working with good entrepreneurs building global software, and yeah, I think that's a little bit about us. Happy to double click on each of these experiences, but yeah, I think largely today we run a fund called BoldCap. We are an early stage software investor. We typically invest pre-seed or seed, lead, co-lead, participate depending on the rounds, but largely work with entrepreneurs who have global ambition and are building software for B2B enterprises. And yeah, I think that's a little bit about us. We've done so far about 19 investments, between both our funds, and extremely fortunate to be working with fast-growing companies, including SpotDraft. But yeah, I think happy to talk more about them.
Awesome, awesome. So, we'd like to step into your shoes and go back to the time when you decide to leave your previous venture, VCAN, and launch BoldCap. What made you make the move?
No, I think in my head it was very sequential, and I'll tell you the journey of why we started Bold, and also kind of what we did at VCAN that kind of led to our thesis at Bold as well. If I take you back to our journey at VCAN, the core problem that we realized was, like I mentioned, we started as an accelerator, worked with a bunch of companies in the East Coast, and one of our exits was to this large automotive company in Atlanta called Cox Auto. And when we had one of our companies got acquired by Cox Auto, they had this massive challenge around integrating some of their acquisitions, and there was a big integration challenge that existed, which was what we started as a company, which was how do we help mid to large scale companies growing on their modernization, and I could see the problems up close, right, where mid market and enterprise companies with lots of great products, but might have grown by acquisition, has data all over the place, and even though in true sense it would have been great if they were all vertically integrated, data spoke with each other, and there was a seamless customer journey, but behind the scenes it was always a challenge, right, because you're trying to put different things together and try giving a seamless experience to the customer. So our job was that, and then we scaled. Cox was our first customer from there, and and then we scaled to multiple other mid-market and enterprise companies. We serve companies like 7-Eleven. We worked with companies like Royal Caribbean, like with in Europe in a company called SNCF, the largest railroad company. And we saw the different challenges, right? And that's where I kind of got to realize that within enterprises, the amount of capital that is there to spend on digitizing, their workflows and functions was massive. So around COVID, had moved, for a while to India, and then realized that one of the constant things that entrepreneurs were asking me was, "Hey, how did you sell into this mid-market or enterprise company, right? And what was the challenges that you faced? What were the opportunities, and so on?" And I realized that that was a common theme that a lot of entrepreneurs were struggling in the early 0 to 2 million phase, right, where they're figuring out what they're trying to build, which of course I would expect them to come with some domain knowledge and expertise, from their own backgrounds. But then when you have an MVP to go live, you wanted to figure out how to sell into your largest customer base, which typically is North America for this, for this matter. So I saw an opportunity, so ended up taking a step back from Wecan, and launching the venture fund, and that's the reason why we picked a certain specific sector, which was enterprise software. Happy to tell you why a little bit more, but but largely one was had very specific understanding of how companies in the US bought software, used software, and what kind of budgets that they had for different categories. The second thing was, I believe, long term, if you're in the venture fund business, right? It's about, as much as it is for any startup, you got to figure out what's your right to win. For us, I was very clear about understanding what's our right to be in that ecosystem and win our right to invest in the best entrepreneurs long term. And there was a very clear strategy for us there. So, and hence we picked a certain theme to double down on.
Got it. So I have a lot of questions on your thesis in a bit, but if I can just stay with the founding moment for a bit, right? If I understand you right, at Wecan, you were looking at the sort of customer side of things, and that was your day to day. But you also mentioned that you interacted a lot with entrepreneurs back in India. So unless I missed it, like what were those? How did those conversations happen to be? Was that just something you did on the side? Were you making your own angel investments prior to that? Because it's two sides of the same marketplace, but that's not the stakeholder you were interacting with, right?
So, interesting question, right? When I had moved back to India, I think, like, as I'm sure all of you, and now Rohit, you being part of SpotDraft, and, when you start hitting a certain type of scale, right? And I think like this was around the time that MongoDB had invested in us. When that news went public, there was at least a fair bit of inbounds that I got as to, hey, how do I sell into X and Y or Z customer, right? So I would say that one of that was that was a trigger. The second part was when I had come to India, there was a dual pronged strategy for me as I was interacting with a few of the entrepreneurs, right? Not a lot, but then it kind of spiraled. I'll tell you how it did. One was I realized that a few of them consistently said, hey, this is not a challenge that we were only facing. It's a constant challenge that multiple people were facing, right? So I went back to what I did before in 2016, which was putting together a small accelerator kind of sorts before I even launched the fund. So it was actually a program of about for 3 months where we said, hey, we're going to build a platform where there are going to be GTM leaders on one side, which is decision makers in companies that I've known in the past, and there are going to be entrepreneurs on the other side who could apply. And it was a no capital, no equity, program, right? So no commitments around investing or no commitments in giving equity. But it was a way for them to kind of see if they could get value from each other. So we had like 200 registrants in 48 hours, and we had about 20 odd mentors in the US that I had known over time. And we kind of got together every week to kind of just talk about, one mentor would present something about go to market to them, right? So realized that this was a pain point that most folks shared. So ended up then also realizing that you could solve for the GTM puzzle by helping them think through how they can go to market, but you can't solve for it without money. That led to us also saying that we got to support this initiative, which is how do we help entrepreneurs scale in their early go-to-market journey, but also we have to do that with capital, and hence the fund got formulated, and that became one of the core elements. As I was doing this, this was the go-go moment for India, for the world, and anywhere in the world, I think. So I'd fortunate again there to kind of meet a lot of entrepreneurs who had similar thesis, had similar ambitions, similar dreams, extremely hardworking, individuals that I, got to meet in that span of time. And they were all across, it could be consumer, it could be, B2B, it could be marketplace companies. So wherever I saw good entrepreneur going after a large problem, I wrote a small check. So that was a little bit of angel investing before the venture fund really started.
Got it. Just two logistical questions so that I can put all the pieces in place in my head. You mentioned us a bunch of times, so I'm curious, what was your starting team like? Or at least what was it? Who were your partners in crime in the early days? And also, some of your story intertwines between New York and Bangalore. So did you move to Bangalore for BoldCap? How was that return journey for an NRI back to India? What was that like? Was it the opportunity that drove you, or was it one of those things where life brought you in and then you discovered it?
So I have to start saying that I'm the one of the biggest supporters of my city, which is Chennai. My heart still is there. My team thinks that I swear by the city, good or bad, but So when I had moved back, I moved back to Chennai. That was my hometown. Coincidentally, it was also the largest, I would say, epicenter for enterprise software companies being built from India at that point of time, with the largest number of scaled companies from a density perspective. I'll also like to think that when there are enough companies building something for the world, there is also a lot of talent that are working there that will come out to build other companies, which we have seen over the next few years, that we were also fortunate to invest in as a part of our funds. But yeah, I think when I had stepped out and was launching the fund, I like to call it collectively, but the first fund was just me. So if you think about my journey into venture, right, even though it was sequential from starting off as an accelerator, building an enterprise software company, then becoming an enterprise software investor, it was still a lot of steep learning curves for me when I was sitting on the other side of the table, right? When I was not asking for money, and now I had the fiduciary responsibility to give money to somebody, right? And it was just not giving money, but can you be net positive to the entrepreneur? Because I've been on the other side, and I know what is it to be net positive for the entrepreneur at different stages, help and also have hard conversations when required, right? So for me, it was a fairly steep learning curve, but I wanted to make sure before I launch Fund 2, I did everything myself, which was from putting our first fund deck together by sourcing every single company that we had invested in, working with our portfolio companies based on the journey, the stage where they are, and try being their Rolodex in connecting them either to potential customers, doing dipstick conversations with potential prospects, thinking about how they should think of pricing or thinking about packaging, whatever, right? And then writing to our LPs every month, every quarter, and managing those relationships. I believe that when you are getting into a new role and you want to build a platform, you got to experience all of that yourself before you could potentially build a good infrastructure and expect your teams to kind of step up. So it was, I would say, an extremely tiring 1.5 to 2 years, where it's about learning, it's about raising, it's about finding those companies, about getting into those cap tables. It's about being value add, it's about building your reputation, and then kind of 2 years in, I think a lot of good things happened. Happy to share some of that if it's relevant. But as our company started to grow, I think that's where we started to feel that now we needed a platform, and we started bringing in our team members. So yeah, so I think that's a little bit about but I do collectively think you're in this to build a platform, and you got to take a collective approach all the time. You have to think us then I, right? So I think it's important.
Got it. Super interesting. And thanks for being so detailed over there, Satya. I'm curious to know what day to day looked like in those early days while you were raising Fund One, right? Did you, who were your early LPs? Did you know them beforehand? How did you end up getting them to invest in you? Because really they're investing in you at that point more than any kind of track record. What did you do for like early deal flow? How did you end up getting your first few investments? I'm curious to know about some of those details there.
I mean, it was a very confusing time, to be honest, right? We had landed on this enterprise software thesis because of my experience being in North America doing some of that. But if you had looked at the 2021, late 2020, early 2021, right? That was probably the most like bull moment for enterprise software. And one of the things that I wanted to point out was everybody felt that there was no coming back, right? There's no going back in enterprise software. There's always going to be, it's going to go up, up, and up. And people were ready to deploy capital at all kinds of valuations, at all kinds of rounds, at all kinds of. So one of the things that I did was I wanted to make sure that we were first principle thinking. We knew that this fund is going to make or break us. So we wanted to make sure that we can demonstrate clearly and articulate why we entered a company, at what round, at what valuation, what did we see in the company, what did we underwrite, and all of that. And I'm telling you all of this because these were parts of conversations to LPs, right? Because the conversation is always like, okay, this, and this is what I would like to say, right? Like going to the point that, that point of time looked like there was a lot of capital in the market. So why you, right? It's always that question, right? Like whether you're a startup or whether you're starting up a venture fund, it's always why you, right? Here I always like to take a bottoms up viewpoint, right? I think you should kind of think about what does the entrepreneur have at that point of time, at their resources to kind of go out, raise money. What do you bring to the table, and what's the value add, right? So one of the things that I wanted to communicate largely was very few investors who are investing in the region at pre-seed and seed had this global exposure, and having done that global selling themselves. That was one, which is, I would say, I took only one anchor, right? That was my anchoring point. My point was, listen, I have had the experience doing this myself. And the second point was, I've had the experience of doing it myself in the last 2 years. Sometimes I think the recency also matters. If you could have done this 10 years ago, the markets could have changed. But have you done that somewhat 1, 2, 3 years ago, where you're still that knowledge is very relevant for people who are coming out and building again? So I think those were the two primary hooks, I will tell you, was there. That's the third thing. What we said was, hey, listen, we are first principle thinkers. We're not going to go into companies with, we think that great entrepreneurs, good businesses, but also the element of thinking of when to enter a company is also important. So we said we'll be extremely disciplined in how we enter companies, and we will underwrite the opportunity from there to see if there is a risk versus reward appetite, right? So because I'll tell you one thing, the one of the things that will always could go wrong is if you're not from the venture world, if you're an entrepreneur who's launching a venture fund. Us as entrepreneurs, I still think myself as an entrepreneur. we never give up, right? So, but in a venture fund game, you need to know when to step out, right? Because sometimes it's not just the entry point, it's also the exit point at a company. So as entrepreneurs, sometimes, you keep trying. Sometimes it works out, and sometimes it can be a massive, outcome. Sometimes you're trying, but you're trying without an end goal, or without some clarity, and that does not lead to outcomes. So sometimes as an entrepreneur, you have that in your DNA, which I had to unlearn a little bit. When do you take a step back, right? Is something is a part of the learning experience. I continue to learn that. It's not something that you master overnight. But that was, something that I actively communicated as well. Because I think one of the core parts that I think anyone should understand is there are lots of hidden objections when you go out and raise. They're never told to you, but you got to understand what your blind spots are, and you need to actively communicate, and say how you're addressing it. So, I think like those were some of the things that we did. Raising your first fund is probably the hardest, as much as it is raising your first round in a startup, right? But I would say it was the hardest because, again, one, you're swapping roles. One, second is it was the point where at least the market was flooded with capital from a macro standpoint. I wouldn't say it from a bottoms up standpoint. I have some inputs there, but um, so showing how you differentiate was very important. So and that took time to demonstrate. So yeah, I think it was largely family offices who saw the opportunity with us. And I was also fortunate that I did take some capital out in that journey that I had done earlier, and I also went in with some amount of anchor.
I'm interested in digging deeper in a bit on what you said about exiting and not just entry. But before that, as an entrepreneur, I kind of get where I'd find VCs and where I'd find angels. They're all over the place, and they advertise themselves to entrepreneurs, and they're in our spaces. But what is, it's maybe a naive question, but where does one find family offices? How do you even start? Is it like all things a word of mouth thing? Do you just know? Yeah, where do you find LPs?
I think I mean, it depends on your stage, what kind of LP check sizes you're looking at. Someone giving you a 250K could still be a family office, but they could also write you a 2 million check. While some family office could give you a 100K check and can go up to 500K, as their ceiling, right? So it depends really what you're raising, what's the kind of, I would say, ranges you're looking to raise, depending on your fund size. But if you ask me, where do you find your LPs? I would say, in your fund one. I think if you're not able to find LPs within your network that is based on the relationships that you have built, it might be extremely hard to come from a background of not knowing anybody to raise your first fund. You could still do it, if you were an entrepreneur, which is what I was, because I through that network I had met multiple investors, who knew about us, who knew me, who understood our skill sets, were betting on that. You need to have some edge in your past journey with regards to exposure. So for you to be able to crack your first, you might still meet some of these LPs in a conference, in an AGM, or any of that. But for them to pull the trigger on you, I think there needs to be some level of comfort.
Got it. Makes sense. Yeah, I guess it's a bit like an entrepreneur starting to their first few customers, right? You probably don't want to cold outbound for your first customer, and you want to start with referrals. But so at this stage, just sticking to this idea of Satya starting his first fund, what are the other challenges here? So I understand the deal flow side. We've touched on it briefly. There's the LP side. What are the other challenges that anyone who's starting their own fund has to deal with? What are the regulatory challenges? How does one literally go about establishing these things? Are those all straightforward, or anything particular that comes to your mind in terms of obstacles on your path at this point?
I keep getting asked this question about India fund, US fund, all of that, right? So we took the path saying that we'll always be a Delaware, headquartered, fund, because We are looking at backing companies that are building global software, which means that we're expecting them to be global. So largely our intention is also that our capital should be global, in that same way. So, but it was also because we were going for global software, and hence I think that decision was natural for us. But more than natural, I think it was, I would say, tougher path than an easier path. Because what happens is, when you choose to raise money, through a structure in the US, most of the Indian investors typically get capped out because they cannot invest beyond a certain pool. And typically, probably, rightfully so, their holidays and their kids' education, and probably, I don't know, buying something from the US and maxing their credit cards through that limit is more important than giving you 100 or a 200K check, right? So one of the things was, when and I was also encouraged to look at the India vehicle. But one of the things that I felt was, a lot of venture funds still struggle today to wire money outside of India. If you're an India domiciled company, it's easy. When you're taking money either from domestic capital or from foreign capital, you wire money into India. But if you're a domestic fund, you have a limit of what you could wire typically out at any given time. So that puts a lot of restrictions around timelines for you to be able to wire money to a company which is at pre-seed or seed, which cannot wait for 3 or 6 months indefinitely based on certain regulations that you or I can't control. So that was a decision that we took. But I'll tell you that it was a decision that we took, but we also took a massive risk in saying that we are not going to take any large India capital, which we still don't have today. We don't have,
Hmm.
pretty much between our fund one and fund two, don't have, I would say, less than 5% or less than 3% is our capital is from India,
Hmm. Hmm.
or across all capital pool I have. If I think loud, probably even less than that. Because and then that's only with friends and people, family, that uh, you want them to be a part of the journey, but it's not moving the needle for the fund. So which means that you're suddenly in a market, which is, you're now spending time in India, but you're saying no to all of that capital because you can't take it. So,
Hmm.
but having said that, I would always take the stand here, is, if you're launching your first fund, take money from anywhere, because you got to prove something. And the only North Star metric for you, in, North Star metric being, always the metric that every entrepreneur goes for, and I think it's a metric that we should also look at, is, I always tell this to, now our team has grown bigger, so but I tell this to our team, that you are as good as your portfolio, and the buck stops there, right? There is nothing more to communicate, more or less. You're as good as your portfolio. So they are your pure reflection of the kind of companies you back, the kind of thesis that you have, your capability to look into the future, and how you have some level of relationships with founders, and what founders will tell about you. Yeah. So hope that kind of answered a little bit of. But if someone asks me, hey, should I take this money, that money, I'll say, take whatever money that suits the purpose, but it has to suit the purpose. um, if you need to wire in 60 days, and you have this compliance regulation, and you don't have a visibility on that, you're probably putting yourself at risk, which will lead to bad NPS for you later.
Got it. Cool. Thanks a lot for that, Satya. So, one follow up question here on the LPs bit, and we can shift gears. I'm curious to know how many LPs anchored your first fund in total.
So it's a little bit different between fund one and fund two. Fund two, there is a massive concentration, with 6 7 people, 6 people doing about 70% of our capital. In fund one, I think we have about 20 22 people of sorts.
Got it.
So, but again, this includes friends, family. But there were a few big checks, but all of the others were definitely smaller.
Got it. So between 200 and 250K
Correct.
checks. So
Correct.
makes sense. Cool. Awesome. Thanks for sharing that. So yeah, let's shift gears now. We spoke about LPs. Can you share a bit more about your first few investments? How did you end up going ahead and sourcing these deals? And really, what were you looking for back then in the founders you chose to back?
Sure. So let me pick one close to home, which is SpendFlo. Let me pick one which is in Bangalore again, something that I closely work with, which is Testsigma. And probably I'll give 1 2 minutes dope of our friendship and relationship, Rohit, on SpotDraft. But I think for us, SpendFlo was an entrepreneur who spent a fair bit of time in the US and had just moved back to India around COVID, who was looking at a few different ideas and was largely working in the CFO team in this company called Volta in the US. And was growing very fast, was going to go public at that point of time. Extremely smart entrepreneur, very diligent around what at least he was trying to solve, very true to what, was when he was validating different ideas, was very true to figuring out, hey, is this a problem worthwhile to solve or not, right? One of the things that and for SpendFlo, when they were raising 500,000, we wrote more than half of that check when they started out. And I'll tell you, what happened there, right? Like we had gotten introduced through common friends in the Chennai ecosystem, not from the venture ecosystem, but more from a friends ecosystem. Said, hey, Satya just moved back from the US. Satya's figuring this out. Hey, Siddharth just moved back from the US. He's figuring this out. You guys have a lot to talk, right? So that's how the conversation started. So we were chatting, really liked Siddharth as an entrepreneur. One of the things that he identified early on was the sprawl of software spending. I would say he was one of the early ones to kind of figure out that in the 2021s, that, listen, I think a lot of money is going into buying tools, but there was no defined process in buying it. And because of which there was a massive spend which happened at a decentralized manner, at every teams having the capabilities to buy software and then get it reimbursed, from the finance teams. But he said, listen, I've gone through the cycle. Typically, one day you wake up, CFO gets a call saying that, listen, spending too much, let's go figure out where to cut this cost, right? So he said there needs to be a better way to kind of manage this process. One second thing is the way that software was getting bought, which was very decentralized. He found that a lot of companies were at different teams were buying, let's say, the same Figma, but off the shelf, right? So and coming from his world where he was in the finance teams of a company, slightly larger company, he realized that if you're buying as a company, you have a buying power to kind of go off the shelf, look for prices, figure out how to negotiate with the vendor and get down the prices based on different terms, right? Whether it could be the number of licenses, how you pay, monthly, annually, quarterly, is there a ramp up period for your licenses, whatever, right? There's lots of different construct. But the challenge there was this whole data asymmetry problem. The person who was buying software was this old school procurement teams that didn't buy software before, were suddenly thrown into buying this software, right? And the problem was bigger because they didn't have any benchmark on figuring out, how to price this software. What is the right price for the software, right? So because there was no standard for that, he felt that there was a platform to be built, and we felt that there was a interesting problem to solve for, and hence kind of made that decision to invest. One of the things that I like about Siddharth, and we spend a lot of time even today, we caught up for lunch in New York yesterday, is the fact that and probably you'll keep hearing about New York quite a bit from me, and you guys know it's something that I enjoy always coming back to. But anyways, uh, the the part where what I liked about Siddharth is he also said very clearly, Satya, these are the areas where I think I have the expertise. These are the areas where I don't have the expertise, right? Where I need to bring in people to kind of solve for that. And he had a very generous ESOP pool from day zero, which made me realize that he understood, because sometimes people acknowledge it, but they don't action on it. I believe action speaks more than your words. And the way to do this here is to have a generous pool, which you're ready to top up at any point of time to make sure that you build a large outcome. So that was one. The other one being Testsigma, for example. It was early days for them. They were at about a little over 100K, in revenue. And KR, I mean, his name is Ruk Mangada, but we all call him KR, is, I would say, one of the most crappiest entrepreneurs I've seen so far. Someone with an incredibly inspiring background from where he came from, his brought up in very difficult times, and he's very proud of that, which is what I respect a lot. It sets a phenomenal sense of grit in going through hardship, to kind of as you guys all know, that it's important that you have that trait to build a large company. And you can go read the story about that in our, so we and through these journeys, right, I said that there was an important part that we need to do, which is document these stories. So we have something on our website called Bold Founder Stories, which is just just capturing their stories, as they what happened before they became an entrepreneur, what was the DNA that we liked, what was the things that they did to get them to being an entrepreneur, and how we see them to scale, right? But captured 90% of their story rather than our thesis of why we invested in them. 10% is about that, but 90% is who is this entrepreneur that we are backing, and what is this entrepreneur made of, right? So I encourage people to read about some of their stories, like that we have published already online, and we continue to publish all our entrepreneurs' journeys over time. We take one at a time, and every quarter we try to spend time to do that. But yeah, I think we captured the fact that that he was very clear after his time in Soho that he wanted to solve for this testing automation problem. It was a very deep problem. You can't come up with a small MVP take to market. You had to build a deep enough problem to kind of you had to build a deep enough product to kind of go to market, because if you had to do end-to-end test automation, you had to do that. So my thing to KR was actually it was an outbound, right? Initially outbound, both him and his other co-founder. First, his other co-founder, got back to me. Then me and KR started talking. I just felt, one, I think, like, I knew the category very well. I understand this category in my past journey. I know that the future of testing is end to end, and also automated testing. Of course, there are different nuances to this. Like, there are different types of companies that have come out, like Browser Stack, and who does certain types of testing. So I was already sold on the on the market. For me, it was like, is this the person that I wanted to back, and is this the company that I wanted to back, right? So my conversation with KR was, listen, I have this baseline of all the things that you should be doing. I know the market. I'm here to figure out whether should we invest. And his first response at that point of time is, we are not raising, right? So we spent a couple of weeks, but then I was able to communicate with him that this is the point to raise, right? And my thing to him was, and we share a very special relationship, is, listen, I'll give you this money. You either take my money and we will figure out how we could go raise money from other investors as well. If they come, great. If they don't, then I will invest. And and that was my show of confidence that, listen, it's not that you got to put together a round. I believe that this category can grow. I believe that I've spent enough time with you now and I've understood the product, that I believe that you're building a world class product. I believe that you have the pipeline to build, a sizable revenue. And let's go try figuring out how to, raise some capital. So I was, in that early days, spent time with him also on the deck. And long story short, ended up, we were able to put together a good 3-4 million round. They scaled, they hit, the million and a half mark. Then they raised Series A, and they've scaled quite a lot from there. I will let the entrepreneurs communicate their success
Metrics.
and let them take the limelight. But been very fortunate, right? And the other side to this was the last part that I will keep it short, because SpotDraft, again, of course, is a very special relationship, right? I think we've known all of you guys for a very, very long time. Um, Shashank keeps talking about the story of meeting together in the Diwali party, in our house in New York, which when I look back, it feels like a serendipity kind of moment, right? And I think the relationship that I have seen build out with you guys, and again, the grit that I saw amongst all of you, right? And one thing that I have to point out here, I have a lot of also bias a little bit around 3-member teams, and I think that I say this not as a VC, but I say this as an entrepreneur, that it's a very long, lonely journey, right? It's not easy. So sometimes I believe two is ideal, three is great. When you have people looking at different parts of the problem day in and day out, you can truly solve. And of course there are exceptions, right? There are people who are exceptions, who build great companies, single-handedly, and I have huge respect for them. They are superhumans, but typically it's impossible to expect that from every person. And that's the reason why I encourage people to be well-rounded teams. But of course, I think, like, you guys had the audacious goal of going after the global market. You wanted to, and the point of time that we got into the company is around the time that we ended up launching our fund. And of course, my point of entry was to calling Shank and saying, listen, now I have something, I have a fund, now I got to invest. And of course his reaction to that was anytime, right? So I think this is something that I cherish as a relationship and friendship beyond just capital, or as an investor. So and those are things that also kind of uh, become a central point of how you invest over time, right? Like, because it's an extremely relationship driven business. And you got to trust the entrepreneur, you got to build that relationship with them. So I know I went in a probably gave you a long this thing, but the goal for me was to give you as detailed as possible, so that anyone looking at some of this can hopefully take pieces of it and stitch it for themselves based on however and wherever they are in their journey.
Got it. No, that was helpful. I can
Awesome.
see why you did that.
Yeah.
So a lot of what you just described was stories, thesis, relationships. A lot of, shall we say, a lot of intangibles. I'd like to maybe spend a minute on how do you think about the math around this, right? At early stage, I'm sure you can't just be like putting things down and doing a cold hard valuation. So how do you decide whether it's the right valuation? How do you think about is the calculus in your head, is this going to 10x my value? And maybe if I can squeeze in one more question. You talked earlier about exits. So is there a constant sort of thread going on in your mind on if there's a secondary, this is the time to exit? How do you think about the end of your investment? I've squeezed in a lot in there. But
So I think let me let me kind of try to break that down, and I'll kind of give you very simple answers to this, right? First, I tell entrepreneurs, every entrepreneur and everyone on our team, is there's no logical math to pre-seed or seed valuations. That's the reality. There is no logical math. The math here is two things typically, right? One is, where is the macro playing at? That's something that's important to kind of take into account, because if you're raising a seed, there is now a threshold at Series A. At every point of time in your company building, there will be a macro, which is one stage later, what is companies getting priced at what valuation. That will play a factor for you in the seed round, whatever it is, like good, bad, great, ugly, depends, right? That's one thing. Second thing is, based on how much you are raising, right? There is typically an ownership that we like to get, because one of the things that we try to do is, we say that, listen, we are concentrated, we are not a spray and pray thesis, we are extremely concentrated. If you see, in our fund one, we had done just 10 companies. And if you technically look back, typically venture funds do 30 to 50 companies, because power law curve is very real in most of our cases, right? So it's very hard to beat it. So one of the things that we constantly do is make sure that we are aware of it, but at the same time, we make sure that we spend a lot of time with our entrepreneurs to make sure that we work with them to get them to the next stage, and hence that, a lot of involvement with the entrepreneurs. So we are generally very concentrated, which means if we are concentrated, we need to have enough skin in the game to be concentrated. Not because only because we want to have enough skin in the game, it is the only way for us to have a fund returner.
Right.
For me, how I think about it is, each of our companies should be fund returners, and which is 1x of our fund,
Mm.
right? Which means, if in a low case threshold, when we exit a company at some point of time, when I say a low case threshold, which is where you have a lower valuation, point, and a lower ownership based on dilutions and how much you could invest, what does that return of capital look like connected to the fund size? That is one part that will drive, and the macro will drive your valuations typically. I think that's kind of what I wanted to kind of, and that's, there is
No,
nothing else beyond this, honestly.
got it. No, that's quite clear. Yes, I wanted to squeeze in one more. I know Rohit wanted to ask you a quick rapid fire, but if I can just ask you one more question, since we're also
Sure.
looking at this from like what it takes to run a VC fund, if you can just briefly talk about your team today, because now BoldCap is a little way in, and you have folks in your team. Roughly, how do you, like, what are the roles in the team? How do you build it up? Because you're a business of yourself, so what are the big like, do you think of it in terms of prospecting and marketing and so on? Or how do you think about the operations?
I like to, and this, I would say, goes back to every decision that we take at the fund, right? We take it from a lens of, is this helping us to build a right to win in the market? Okay. So every hire we have made so far was first communicating that, listen, I think if you want to be a part of the fund, it's not a glamorous job. I would say it's by far the most humbling journey that you would get, because you're sitting technically as an investor with a pool of capital to give. But remember that you have a lot of financial responsibility for that. But at the same time, you have the opportunity to be the person who believes in something that has exponential value for consumers and businesses, right? So how do you kind of play that part, right? So we think about, how do you win every time? So what does that mean, right? That means that, can you bring something to the table outside of capital, right? Which is,
Right.
what is your understanding of that space? Can you be net additive even in the diligence process for the entrepreneur? Can you ask relevant questions when they are going through the journey of you know, talking about their problem and kind of figuring out, make sure that that process is, useful on both sides. So that is from a diligence standpoint. The second part is always be there for the entrepreneur, which is something that I, so never would you expect me or our team members, and that's the culture that we are building, that, the entrepreneur, it could be the smallest problem, or it could be a problem that the entrepreneur has, at a board level, that requires a lot of convincing and a lot of, a background work that you got to do. Always be there for the entrepreneur and understand what is the motivation or the intention of that particular subject or topic, and help the entrepreneur to go through that particular thing, right? And always remember that, for you are not, as an investor, a lot of people, also say that they have a right to be at the table. I always say, earn your right every day, right? That humbles you, that makes you not just a person that is liked amongst the entrepreneur, but everyone eventually will want to have you on the board, will want to have your money on the cap table, because you are generally net additive, and you are, you understand the challenges of both building and the category in which that they are building, right? So I think, like, it's a lot of, it's a lot of that.
Got it. No, thanks for that. I think that answers a better question than I had. My question was quite tactical, but that makes sense. Deriving from the first principles, what you need for your firm.
Cool. We keep it rapid fire. So, Satya, just first thing that pops into your head, that's what we can actually jump into there. What's the one thing you've changed your mind about in the last 12 months?
Interesting. Just market size and, founder market fit.
Oh, interesting. Okay. How did that change? Sorry, I know you said I said rapid fire, but this almost deserves a follow up.
Probably an offline conversation, but, I think the intersection is important. You can't take a look at it, individually, but I think the intersection is important.
Got it. Okay. Um, if you could give your younger self one piece of advice when starting out, what would it be?
Probably network more, right? And surround yourself with ambitious people.
Got it. What's one book every entrepreneur should read and why?
I'm not this bookworm, so I think you're asking the wrong person. But I would say I have had the opportunity to talk to entrepreneurs in real time. I think that has enriched my experience. Everyone should try doing that as much as they can. I think and go as deep as you can. Try to build relationships and go as deep as you can.
Got it. If you could have anyone as a mentor, who would it be?
Interesting. I have a lot of respect for this, for Benchmark. I've kind of seen their, their investment journey, their discipline in keeping fund sizes relatively medium size. I think that's the one that I would, as a firm. And of course there are, 6 7 general partners there, that and they run a flat organization, so I have a lot of respect for them. So hopefully at some point of time.
Cool. What's the most underrated skill for a VC that you think people should pay more attention to?
I think empathy at early stage, I think, is important.
Awesome. Cool, Satya. Thank you so much. Those are all the big questions from me.
Okay,
And
awesome.
yeah, I had a lot of fun. I think I learned a bunch and I'll connect with you again offline.
Yeah, no, pleasure. Thanks, guys. Hope this is helpful to your journey. Hopefully, this gets more people, interested, excited. I went into certain details because I always believe that as much of detail as you can, I think, is the key part for people to kind of consume certain pieces of content. Sometimes it could be relevant, sometimes it could be not relevant, but, I hope it was not too much of a detail, but, hopefully that gives some people excited.
All right. See you, Satya. Take care. Bye. Hey, Goa. Yeah, what did you think?
Yeah, I mean, honestly, I really liked it. Like, I like I feel like most content I consume about VCs is about their thesis, but there's this point that Sathya pointed out as well, which is founder market fit. Different people know different things to different capacities, and by definition, almost, if a VC is a founder of their own firm, the thing they know best is the mechanics of running a VC firm. And I've sat on one side of the table, and I know I've heard a lot of the theory of how VCs think, what challenges they have, and so on. But the actual mechanics of hearing how a VC firm was started was interesting. I also there's a lot of things that I could relate to, even from an entrepreneurial perspective, which I actually look for in good entrepreneurs, which I saw Sathya resonate, which makes me think that running a VC business is not too different from running any business, which is sometimes when asked super tactical questions, his answers were more like go back to the core thesis, which is entrepreneur first, think first principles, how do you win your right to be at the table, which again, I found super interesting in terms of pattern matching. I don't know if I come out of that thinking that I want to be a VC, because some of the day-to-day of what he's talking about, which is networking, realizing your vision, kind of a return through other people, I think that's sort of something that comes down to people's taste. But yeah, overall, that was interesting to me. What about you?
Yeah. He's definitely more of an entrepreneur than a lot of other VCs that I've met or have that I usually meet, in a good way. And that came across through a lot of his answers as well, where most underrated skill for a VC, empathy, especially at the stage he's at, because you know what it is, right? In the pre-seed and seed stage, it's just so hard, right? When you're actually trying to figure things out. The other thing was, I don't think we really got this out during the podcast, but getting 22 people to put in 250K for his first fund, around 250K for his first fund, that could not have been easy, right? Because it didn't seem like he was getting some super rich billionaire to put in 5 million. It was more like, hey, 22 people to put in 250K each. Uh, it definitely shows a lot of hustle. And I think he alluded to it during the rapid fire questions as well, in terms of what he wished he'd done earlier was to network more, because that's really how he built his fund, his first fund at least, through his network. So that was interesting to me. The other thing that, again, kind of resonated with what I would typically hear from an entrepreneur is how important culture is when building a company. It seemed like he's put in so much thought into that while actually building BoldCap. So, yeah, those are basically my big thoughts. And for what it's worth, BoldCap has been a really good partner for us at SpotDraft. And the events they put together, the kind of introductions that they're able to make, we've really benefited from that. So, yeah.
Yeah. Since if Satya, if you're still listening to this debrief, just a bunch of questions that I wish I'd asked, right? And just off the top of my head, from just starting linearly chronologically, we had this conversation on when should you start a startup, and part of our conclusion was there's a lot of sort of baseline ground rules, best practices you can learn by going to a firm before you start your own thing. And in Satya's case, feels like he didn't join a VC, and he just started his VC firm instead. So I guess one question I would have asked is like, why did you just join a VC firm, and would that have actually helped in terms of networking, understanding the landscape, making some of these mistakes, and so on?
Mm-hmm.
I would have loved to ask him about his relationship with LPs. I find that VCs these days are quite understanding of VC math, right? You talk to an average VC these days, of course, there's pressure because you're taking someone else's money, but they understand that this game could very well be 0-1. So some of the pressure of almost taking money from someone else isn't alleviated. You still feel that, like, I know I felt that sort of weight of responsibility, not in a negative way, but in like taking it seriously perspective. But I imagine, I'd like to think LPs, unless LPs have also gotten mature, are a little bit more demanding, right? For example, I don't know if Masayoshi Son is going to the Saudi Arabian, when when WeWork doesn't do well, he might understand, but does the Saudi king who gave money to him in turn understand when the money goes down? And sure, everyone looks at the tech, but are people actually understanding it? I'd love to ask him about that relationship, how he sort of sleeps when it comes to sort of worrying about this. And I guess a related thing is also KPIs, right? If he started this in 2020, I know one way I look at the North Star of my businesses is what's the revenue on the board. right? And you can sort of track some of these things weekly, monthly, yearly at most. But if your KPIs are like decade long, and I was listening to this podcast just recently which said that the correlation between fund returns even 5 years in compared to the actual DPI or the money that they actually distribution to, I think, paid in capital that they finally return isn't necessarily correlated. How do you sort of sleep knowing that you don't really know a North Star aside from like follow-on funding, which could mean anything, right?
Yeah.
Yeah, and how do you scale? I mean, so much of what he's saying is Sathya. What he's saying is his network, his personality, him being New York. Like, can you scale, or is VC? I guess VC is like fundamentally a cottage industry, and maybe that's how it'll always be. And the BoldCaps of the world are what we need more of, as opposed to the 100th partner at Sequoia Capital. But yeah, sorry, I'm just going through like all the questions that I still wish I'd asked him.
Yeah.
But yeah.
So that maybe we can bring him back again, especially if our audience likes it. How the other thing that was quite interesting for me is I keep going back and forth, right? I almost feel like I think an entrepreneur needs to be 100 times more sure about what they're doing and conviction in what they're doing more than a VC that's actually putting in money. Because at some level, a VC is de-risking his risk across a bunch of different portfolios, whereas an entrepreneur is just focused on one idea and that's it. On the negative side of it, right, we have heard of situations where entrepreneurs themselves have left the companies they started, but VCs do need to stick around and actually end up bringing certain things to its logical conclusion as well. So even if the company's not doing well, you need to still keep an eye on that business. You need to end up reporting back to your LPs on both your wins as well as your losses. Those are things that I would definitely like to know a little bit more about. But I think Satya actually gave us a lot of tactical advice in terms of what it would take to really start. And you're right. The most interesting part about him was that he didn't work at a fund when he started this. It was he's very much an outsider in the space, or he was very much an outsider in the space when he started, which is quite interesting. But yeah, I think we're
I'll just
yeah.
I'll say one quick thing on this whole VCs having to deal with things even after shall we say, the founders have left in like the worst case scenario, right? There's been a lot of diatribes online, and maybe we can do this in one of our weekly review conversations around how bubbles in VC in the world of venture capital are formed, because you have to follow the incentives, right? In a large firm where someone puts up money, the person who actually made that decision has often left the firm, right? They may be like a career VC. So you are still an employee at a VC firm who's made a bet, but then it takes 5 years for your bets to pay out, at which point you may have changed jobs, moved to a different VC and so on. So one of the accusations, and I don't know, I'm just like, this is more just observational conversation, just content I've been consuming through podcasts, is that bubbles form often because making a lot of investments is how you sort of get promoted in the long run, and then doing follow-on rounds and making sure that sort of IRR goes up is a great way to sort of improve your personal stake. Then if you start your own VC firm, you have nowhere to run to, right? And this is the same question as like a VP, a director can like make big claims, but at the end of the day, the founder, CEO is often the person left holding the bag.
Yeah, that's also true.
So yeah. So it's
Cool.
scarier running your own firm.
Yeah, I'm not sure if I'd want to do it. That's the honest truth. I feel like I enjoy the startup side and the operational side more. Not to diminish anything that Satya's doing or what the value VCs add in the ecosystem. I just feel like it's not really my cup of tea. That's just me.
But I know you like working with product and tech, so it comes down to what floats your boat, right? Everyone's wired.
Yeah.
Cool. All right, Rohit, thanks for putting this together, and let's see what we have in store next. Like, share, and subscribe, folks.
Yeah. See you guys next time.